Level 1, the first deposit. It starts with a gym bag full of cash and a teller window. You are about to learn how America's anti-money laundering system, the banks and FinCEN, sees you from the very first dollar. This video is for educational purposes only. It explains how real investigations work and the consequences of crime, not how to commit it. You walk in with $10,200 in cash, and the moment the teller starts counting, a 50-year-old law called the Bank Secrecy Act quietly wakes up around you. Currency transaction report, $10,000 cash threshold. Any cash transaction over $10,000 triggers a currency transaction report. The teller files it electronically to FinCEN, the Financial Crimes Enforcement Network, and is forbidden from ever telling you. There's no alarm and no phone call. The teller smiles, hands you a printed receipt, and the report is already moving up through the federal system with your full name attached. That report carries your social security number, your home address, your stated occupation, and the exact amount. It lands in a federal database that agents can search for years to come. And banks are only one censor. Casinos, car dealerships, and check cashers file the same reports because the Bank Secrecy Act of 1970 turned the whole economy into a quiet grid. What looks like a routine deposit is really a permanent federal record. To you, it feels like nothing happened at all, but in the system's eyes, you just created a permanent data point, and data points are how every laundering investigation eventually begins. Millions of these reports get filed every single year, and most mean nothing. Yours would mean nothing too if this were the last time you ever carried in a bag of cash. Level 2. Structuring. You think you have found the loophole. Keep every deposit under $10,000 and the report never gets filed. Criminals call it smurfing. Federal law calls it a felony all by itself. So you split the money carefully. $9,000 at one branch, $8,500 at another, spread across 3 banks in a single week. You feel patient, disciplined, and invisible. Structuring penalty, 5 years federal prison. Here is what nobody told you. Structuring deposits to dodge the reporting threshold is its own federal crime, even if the money were perfectly clean, and it carries real prison time alone. Bank software was built to catch exactly this pattern. It links your accounts, your branches, and your timing, and it flags anything that keeps hovering just beneath the reporting line. Some people recruit runners, friends, and relatives making small deposits all over town. Every runner adds a name to the pattern, and every name is a person who can later be squeezed. A compliance analyst opens your file for the first time. She sees 9 deposits in 11 days, all sitting just under the threshold. She does not need a confession. The pattern is the confession. Suspicious activity report. 30 days deadline to file. She files a suspicious activity report on you. By law, the bank must send it to FinCEN within 30 days, and by the same law, no one is ever allowed to warn you. If a banker so much as hints that a report exists on you, that banker commits a federal offense. The silence surrounding you is not politeness. The silence is the law working. You walk out feeling like the smartest man in the building. Behind the glass, your name now sits in 2 federal databases, and the system has begun writing a story about you. Level 3. The front business. The bag of cash needs an explanation, so you buy one. A car wash, a nail salon, a vending route. Any business where customers pay in bills that nobody ever counts. This is the placement stage. The moment dirty money first enters the legitimate economy, every night you feed illicit cash into the register and report all of it as honest sales. The trick is as old as organized crime. It is the same wash cash through commerce play that Al Capone's bookkeepers ran a century ago, and it is why we call it laundering at all. The method is inflation. Real customers cover part of each deposit and invented customers cover the rest. You even pay taxes on the fake income because a tax bill looks like innocence. On paper, the car wash is thriving beyond reason. Every morning you deposit record revenue, and every morning the bank's merchant models quietly compare you against every car wash they have ever seen. Because banks profile businesses too. They know what a car wash in your zip code should earn per lane, per month, per season. Yours has been earning triple since the day you bought it. What looks like booming small business is really a cash laundry. Your revenue curve never dips in winter. It never dips in rain. A car wash that ignores weather is not a business anymore. It is a machine for washing something other than cars. The monitoring system promotes you from anomaly to outlier, and outliers get a human. A file with your business name on it is opened on the compliance floor, next to the first one. Another suspicious activity report goes out, this one describing a cash-intensive business with revenue inconsistent with its size and location. FinCEN now holds 2 reports that share one name, yours. Level 4. The compliance floor. Somewhere above the marble lobby is a floor you will never be invited to, where analysts, algorithms, and former federal agents spend all day reading the private financial lives of strangers. Every large bank runs transaction monitoring software that scores every account every single night. It weighs velocity, volume, geography, and counterparties, and your risk score has been climbing quietly for months. SARs filed per year. 3.8 million reports to FinCEN. American institutions file millions of suspicious activity reports every year, and most go nowhere. But none of them expire in practice, because investigators search them backwards the moment your name surfaces anywhere else. The bank also knows exactly who you are supposed to be, know your customer rules, recorded your job, your income, and your expected activity on the day you opened the account. A truck driver depositing $40,000 a month no longer matches his own file. The system does not accuse you of anything, it simply notices that you have stopped making sense. Compliance ranks its customers by risk. You have moved from standard to high to critical, which means a human being now reviews what you do, transaction by transaction, week after week. The analyst reviewing you is not a villain. She's 34, carries a caseload of 80 alerts, and has a legal duty to escalate anything she cannot explain. She cannot explain you. Banks can also simply fire you as a customer. It is called de-risking. One letter arrives, the account closes, no reason given, and a closure for suspicion quietly follows you to the next bank. You know none of this yet. You are out at dinner, paying with a card the compliance floor watched clear in real time, already sketching your next move on a napkin. Level 5. The shell game. Cash was too visible, so you go abstract. Shell companies, wire transfers, invoices for services that never happened. This stage is called layering, and it is where launderers feel safest. For a few $100s apiece, you form limited liability companies in Delaware and Wyoming, states that historically asked almost nothing about the human being actually standing behind a company. Beneficial ownership rule. 25% ownership must be named, but the anonymity is thinner than the brochures suggest. Banks must now identify any person who owns a quarter of a company, and FinCEN keeps pushing to see through every shell. You wire money between your own companies dressed up with invoices for consulting that never happened. Company A pays Company B, which pays Company C, which pays you a generous salary. Every wire crosses systems like Swift and FedWire, and every hop is logged forever. Layering does not erase a trail, it only makes the trail longer, and longer trails prove intent. On paper, each transfer looks completely ordinary. Stacked together, they form a closed loop that starts and ends with you, and closed loops are precisely what financial analysts are trained to find. Some of the money goes offshore to jurisdictions that promise privacy, but foreign banks file their own reports, and mutual legal assistance treaties let American investigators request records with a signature. You even try cryptocurrency, believing the blockchain is a shadow. It is the opposite. It is a public ledger that never forgets, and the big exchanges file the same reports banks do. You believe complexity is protection. Investigators believe complexity is evidence, because a normal person has no honest reason to route their money through 5 companies just to pay themselves a salary. Level 6. FinCEN. In Vienna, Virginia sits the Financial Crimes Enforcement Network, the agency collecting every report ever filed about you, letting algorithms and analysts connect what no single bank could see alone. FinCEN is not a police force with sirens. It is a database with a mission, holding reports from every bank, casino, and money service business in the entire United States. The BSA database, over 300 million reports on file, your currency reports, your suspicious activity reports, and your wire records from 3 different banks all sit in one searchable system, waiting patiently for someone to finally type in your name. An analyst runs link analysis on the results. Your shell companies, your car wash, your 9 early deposits, and your cousin's account all snap together into one glowing web on screen. Section 314 of the Patriot Act even lets investigators ask every bank in the country whether they have ever seen your name. The answers come back within days, not months. By now, the file on you includes suspicious activity reports from 3 banks, years of currency reports, dealer forms, and wire logs from 2 continents. You have never seen any of it. Separately, each report was only a whisper. Together, they are a narrative with a beginning, a middle, and a suspect. FinCEN packages the file and refers it out to law enforcement. The referral lands with IRS Criminal Investigation, the same agency that brought down Al Capone. Their special agents are accountants who carry badges and guns, and they have already read everything. Level 7, Integration. The final stage of laundering is integration, turning washed money into a life you can touch. A house, a boat, a portfolio. This is where you spend it and where you sign for it. You buy a 4-bedroom house in cash through one of your shell companies, and it feels untouchable. Real estate has always been the favorite parking lot for laundered money worldwide. FinCEN targeting orders. $300,000 all-cash reporting threshold. Except FinCEN issues geographic targeting orders that force title companies to report all-cash purchases and name the real human behind the company. Your untouchable house just filed a report on you. The watches, the jet ski, the Mercedes. Luxury dealers file reports on large cash payments too, using an IRS form called an 8300 that goes straight into the same federal pool. For a while it genuinely works. You are a businessman with a portfolio, a club membership, and a polished story. Integration is where launderers finally exhale. That exhale is the trap. Then comes the oldest trap in the book, your own lifestyle. You declare $80,000 a year and live like you earn $800,000 publicly, proudly, and on the internet. Agents call it a net worth analysis. They total everything you own, subtract everything you ever declared, and the unexplainable gap becomes the measurable size of the crime they charge you with. Every asset also demanded paperwork, and paperwork means lies told in writing. A mortgage form, an insurance application, a club questionnaire. Every signature is a fresh federal count, quietly waiting to mature. Integration was supposed to be your finish line. Instead, every asset became an exhibit, every deed a confession with a date on it, proving you had money you could never explain. Level 8, the task force. You are no longer a file in a database. You are a case with a number, and a federal task force of IRS criminal investigators, FBI agents, and prosecutors now works your name full-time. Grand jury subpoenas go out to every bank you have ever touched. The banks hand over everything, statements, signature cards, even lobby camera footage, and never breathe a word to you. Agents sit in a parked sedan across from your car wash, clicking a hand counter for every real customer. They will do this for weeks in shifts without ever being noticed once. Tuesday surveillance count. 41 real customers. The surveillance math is devastating in its simplicity. Your books claim nearly 200 washes a day. The agents counted 41. That difference is not an accounting error. It is the indictment. Then they find your weakest link, the cousin who ran deposits for you back at level 2. Facing charges of his own, he sits with prosecutors and tells them absolutely everything. The federal money laundering statute, Title 18, Section 1956, carries up to 20 years per transaction. Prosecutors are counting your wires one by one, and every single count stacks on the last. On paper, your total exposure runs past 200 years. Nobody actually serves that, but the number was never designed to be served. It was designed to make you sign a plea. Then one quiet afternoon, a magistrate judge signs 3 documents in a row: a search warrant, a seizure warrant, and an arrest warrant. Your name is printed on every single one. Level 9, the raid. It comes at 6 in the morning because that is when people are home, groggy and predictable. You wake to headlights flooding the bedroom curtains and a fist pounding on the front door. Agents and windbreakers move room to room, photographing everything before they touch it. Your phone, your laptop, and the notebook you always meant to burn all go into labeled evidence bags. In the same hour, other teams hit the car wash and your formation agent's office. Federal raids are synchronized, so nobody can warn anybody. You built a network. They arrested a network. Seized this morning. $2.1 million in accounts and assets. Every account is frozen before breakfast. Civil forfeiture lets the government seize the house, the cars, and the balances immediately, and argue about who really owns them in court much later. You reach for a lawyer and hit the cruelest twist in the system. Paying counsel with laundered money is itself laundering, so the war chest you built for this exact moment is radioactive. Handcuffed at your own kitchen table in yesterday's clothes, you finally meet the people who have been reading your bank statements for 2 years. They are polite, unhurried, and completely certain. By noon, your name is in a Department of Justice press release, and the local news runs it at 5. Everyone you ever lied to finds out within the same single hour. Level 10. The fall. The trial takes 9 days, and the evidence is not dramatic. It is worse than dramatic. It is arithmetic. Read aloud to a jury in a quiet room, report by report by report. A bank analyst you never met testifies about the report she filed years ago, back when you still believed splitting deposits across 3 branches was a loophole instead of a felony. Your cousin testifies for the government and never once looks at you. Then the recordings play, and the jury listens to your own relaxed voice explaining exactly how the invoices worked. Federal trials. Over 90% end in conviction. Federal prosecutors rarely bring cases they can lose. The overwhelming majority of defendants who insist on trial are convicted anyway, which is why almost everyone signs a plea deal long before this room. Guilty on all counts. At sentencing, the judge cites the amount laundered, the sophistication, and your leadership role. Every quality you were once proud of makes the final number bigger. The sentence: 11 years federal prison. The sentence lands at 11 years in federal prison, forfeiture of everything the money ever touched, and a restitution order that will still be following you when the cell door finally opens. Your family learns the vocabulary of your case the hard way: forfeiture, restitution, supervised release. The house sells at a government auction to a stranger who never asks about its history. You trade the tailored suits for khaki prison scrubs and a steel bunk in a low-security federal facility. Somewhere back home, a new owner is running your old car wash, legally, because the system never actually chased you. It just wrote everything down and waited. From that first quiet report at the teller window, the paper trail only ever moved in one direction. Toward this. That is how banks, compliance analysts, and FinCEN trace you at every level, from one cash deposit to a federal cell. Drop the next role or crime you want broken down in the comments.